Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for the trading day of Wednesday, May 8th, 2013. We kind of a classically bifurcated session today where we had strength in the broad market but weakness in the Nasdaq side. We had the S&P up about 7 handles on the day. The Dow closed above 15,000. But the Nasdaq side was lower on the day, so it wasn't that classic rising tide that you kind of hoped for. The advanced declines were very positive on the New York side. We're plus 1,500 issues, but the Nasdaq side was much skinnier, only plus 600 issues. The New York trend was higher on the day, closed at 1.15, and the VIX was higher on the day, even though the major averages were up on the day. We closed at 12.83. But let's move on and take a look at some of the majors and see what they have to tell us. Right, here's a look at the ES futures and daily bars. This is a new high close on the move, and it's also a new intraday high in the move. So we can check off both those boxes here this afternoon. We are getting close to that 8-ace level on the Murray Math box. That's going to be 1625. That's going to be a key level if we can get up towards there. We are starting to, for the first time really this year, to get some space and some distance above the 10 EMA. So we're starting to get a little bit overbought here, but the internal measurements really still have some more room to run. The MACD obviously is crossed above the zero line and is positive. The CCI is still a ways away from that terminally overbought area where you get plus 200 or more. So another positive day. We do have some more room to run on the upside, but that 1625 is going to be key resistance. To the downside, key support is going to be the gap window about 1605 and a half, which was the gap from the non-farm number. Looking at the Nasdaq side, the NQs. The NQs had a much tougher session. They opened near the high of the day, but closed pretty much unchanged on the day, and actually took out the previous day's low. The 8-ace level there on the Nasdaq side is 29.68 and 3/4. So we're getting closer to that level, and we do have still a good bit of space above the 10 EMA, which we pointed out in the previous market preview. So we're really starting to feel the effects of being at least short-term overbought here. The MACD is positive still, but you can see how it's really the most overbought it's been all year so far. So this is definitely something that you want to keep in mind. So even though we've have some positive closes in the broad market, I would definitely keep some short ideas ready if in fact we do start to see some downside develop in the market. Internally, the 10-day the trend today on a closing basis was above the one kind of threshold. So we did actually curl up in the 10-day trend, and we're actually pretty far away from the 0.85 overbought threshold. We're really just right in the neutral area here. So there's definitely more room for the trend to move and support higher prices if they can get it done. But the one thing that's getting close to a reversal threshold is the put call ratio. So let's take a look at that. Here's the total put call ratio. This has been moving towards that reversal threshold of about 0.5, where you get that climactic reading, and then it tends to run out of gas, and you usually get a very, very sharp move within 72 hours of recording that. We're not quite there yet, but we're definitely moving in that direction. Definitely the market players today were really favoring upside over protection. They were really coming after calls much more aggressively than they were coming after puts. So we're definitely the second, most oversold we've been this year so far. The only other reading we had was back here on March 14th. So we're really getting close, and we've got to pay attention to this to see if we get that climactic reading. All right, here's our ratio chart of the S&P cash index divided by the TLT. We're actually getting close to the previous high here, which was that risk-on posturing where people are coming after stocks, selling bonds, putting risk on rather than favoring defensive positions. So we're getting close to that prior high, and I think we want to be ready for that. And if we do get up and trade that prior high, that's going to be very, very notable. But if we get up in there in that area. We're also going to be struggling with this trend channel again. So let's leave the chart as it is for now, with the prior high delineated. And if we get back up in that area, that's going to be probably a pause spot for the market before it kind of recharges, and then possibly makes an exhaustion run to the upside. But for now, if we get up back in this 1360 area in the ratio, that's going to be a key resistance area for the advance. Another key feature I wanted to point out here on an intermarket basis is the OSX, which is the red line, versus the oil futures, which is the blue line. As the oil futures were tanking here and plummeting when gold was being liquidated, and the whole commodity complex basically had a global margin call. The oil stocks themselves, oil producing stocks, the drillers and whatnot, were not breaking down to the same extent that we saw in the futures. So we really thought that this was really just kind of a margin sweep rather than an actual breakdown in crude. What we've seen now today is we just had a new high in a relative basis here in the OSX, the oil drillers. So what this does is this actually sets the table for higher prices in crude futures. Crude was kind of sluggish today, but if we see some upside in crude tomorrow, I would definitely trust that and look to get on board the long side of crude tomorrow. All right, here's a look at the NDX versus the S&P. The NDX has been relatively weak versus the S&P, which is why this ratio has been declining for most of the year. But we had a burst of strength in Apple, which in and of itself helps the NDX because it's so heavily weighted. But also don't count out the importance of the halo effect, where it trickles down to the other semiconductors and some of the other hardware makers. So that was very important and really gave a shot in the arm here to the relative performance of the NDX. But what we've seen in this last session was some real relative weakness develop in Apple again, back to kind of the old playbook, and you can see how quickly this affected the overall NDX. So I really think that the health of Apple really is important to the overall NDX here. And if Apple kind of goes back to trading down again, we're probably going to see this ratio decline. And then, if you make the leap and go with the whole quantum effect, then we're going to see relative weakness in the NDX overall. So definitely keep an eye on that. All right, here's a look at the individual sectors sorted from best to worst. The transports were the best sector on the day. They were up 1.5%. I think that should be no surprise since Dow was able to cross 15,000. That's important for that. BKX, the banking index, was also very strong, much stronger than the market, and certainly much stronger than the overall NDX. Oil services were also fairly strong. The real weakness, there was weakness in the XAU again, probably a source of funds again, as we're hitting new highs in the Dow, crossing 15,000. One thing that's a little bit troubling here is the SOX. As soon as Apple just kind of petered out, then the enthusiasm for the SOX waned as well. So the SOX were again flat on the day, and the BTK index was down about another 0.5% or so. So they're still taking profits in the BTK, and definitely want to keep an eye on that area, on that sector, and those stocks for reversal ideas. Here's a look at the BTK index, which is now 3 days down. We had this dragonfly doji up here with this really tall tail and this skinny little close. Subsequent small down day, and then we lost a little bit more yesterday, so we're back down into the 7/8 level at 1937. Next area of support to the downside is going to be the rising 10 EMA at about 1923 or so. So that's going to be a key area, and that's also going to close this gap if that gets down there. So that's a double level to the downside if in fact the BTK follows through to the downside. The XAU broke down out of this little triangle that it had been forming, and closed fairly weakly. If you take a look at where it closed, let me move my cursor. It closed pretty much right in the area of these prior lows. So if we do continue to the downside, the target's going to be the 0 level at 100, and up above is going to be this open gap here that they left. So two levels to watch there in the XAU. Here's a look at the BKX, which was positive on the day. It made a new high on the move on an intraday and closing basis. It's now above the +2/8 level on the Murray Math box. So this is going to frame shift up tomorrow, and we're going to see these lines widen out. So we're going to have to take a look at that again tomorrow and see if we can follow through. Just note that in this move here. We're only 3 days up in this move so far, so there's definitely some wiggle room to the upside before we get any kind of resistance from the seeker count. And here's the OSX, the Oil Services Index. We had this little very, very flat 1 through 13 that we thought was kind of suspect. We've broken above that now. We've closed above the risk level here, so we're probably going to wind up breaking this risk level and nullifying this signal. The other key event here is we're closing above the plus 2 ace level, so this is going to frame shift as well to the upside. All right, folks, that's going to be it for this evening. As always, thanks for listening. This has been Rich for Tradesight.